start showing my screen. All right. So today we are going to be talking about intercompany transactions between QuickBooks, the difference, right, between functionality in QuickBooks and the functionality in Acumatica. So before we get things started here, so of course we just like to remind everybody about the four uniques, what makes Fourlane unique over here. So we have been the #1 QuickBooks solution provider since 2010, which means we do a lot of work in QuickBooks Enterprise. We took on Acumatica as a alternative for our QuickBooks clients, I think 4 years ago now. And that is something that is very unique in this space, having both the QuickBooks, having consultants, not just a firm who knows both sides, but consultants that know both sides, both the Acumatica and the QuickBooks side, how to implement both products, helps tremendously when we're transitioning people from one to the other. Here at Fourlane, we are experts in systems and accounting, so we will be able to talk debits and credits with you, balance sheet, cash flow, meanwhile also be able to tell you what's the best way to set up your software. We've also found that that is pretty unique. A lot of times in the ERP space, we'll see people who talk about the software and they can implement the software, but they're not quite sure what a balance sheet is. So didn't know that was a unique thing, but we are discovering that along the way. Then, of course, we're project managers here at Fourlane for change management, right? When clients have big ticket items going on, or even small ticket items going on, they reach out to us so that we can help during that transition. So that is incredibly unique, right? Having all four of these things together. Just as a reminder, our formula for success is that we want to get you data so that you can make decisions easily. When we're talking about intercompany accounting, of course, right, getting data between multiple systems, multiple company files, that is incredibly important if you need to have access to data across multiple company files. If you have a management company, right, that is paying all the bills, and then the bills need to be posted into the individual entities. I mean, there's a lot of different ways that we could use this, but the most important part for us when we're going through and setting you up is we want to get you that data to make decisions. All right, so we're going to be talking about multi-entity. I know I've got a slide here. Everybody's going to start reading the slides, so maybe I should go back to my data decision-making tools here first. Multi-tenancy, right, is one of the key factors when it comes to being able to handle intercompany transactions. So what is multi-tenancy? It's the way a software is structured where multiple independent instances of one or multiple applications operate in a shared environment. So these could be completely separate entities that do not share any like data. In each tenant, they can have a parent-to-child relationship where the parent data can be shared with child files. This allows for a singular centralized chart of accounts, as an example, or a vendor list, or user functionality. Okay. In the QuickBooks space, which we're going to look at a little bit here, in the QuickBooks space, we can have separate company files, right? When you're in QuickBooks Online, it's a separate subscription per company file, but you can have separate company files. You would have to go to an app to consolidate any information across those files. There is not sharing of data across those files, right? There's no sharing of chart of accounts, list data, customer data, whatever it is. In QuickBooks Desktop, right, we can have separate company files. The licensing allows you to have as many company files as you want. All that matters is the server space that you have to manage and hold all those company files. You don't have to pay for additional licenses for every single company file you have. However, in the QuickBooks Desktop space, managing data and user access across multiple files takes logging in and out of each file. Right? I go into my QuickBooks Enterprise file, I add the chart of accounts account, maybe I export it so that I can import it into the next file, but then I have to log into the next file, import it into the next file, and on along down the line. User data cannot be exported currently, right? So there is no export of user data. So if I have to set up Chris as an AP clerk in 6 of my company files, there is not an easy way to do that. I have to go into each of the 6 company files and set them up, okay? We frequently get people asking to share data across multiple company files. And of course, we know in QuickBooks it can be time consuming. So when we're weighing ERP readiness, we want to see how often is that happening? How often are you having to create a new chart of accounts account? Probably not that often. Hopefully not that often, right? That would be our goal, is to not have that not be that often. However, maybe new items or new vendors that are going to be shared, that can happen quite frequently. In the QuickBooks space, of course, we have an alternative, or not in QuickBooks space, but in the general business space, you know, what a lot of clients will end up doing is that they'll have a holding company that processes all the bills, and then, you know, we share data across into the different company files via journal entries or whatever it is. So of course, the main topic that we're talking about today, so understanding the tenancy is important, but why that's important is we're going to be talking about intercompany accounting. So this is the process of recording financial transactions between different company files within one company, right? So Fourlane over here is paying a bill on behalf of its sister company, POS Warehouse, and POS Warehouse is going to owe Fourlane that money back at some point. Okay. Debits and credits we'll take a look at here in a minute inside of QuickBooks. Okay. All right. So let me go ahead and open up. So I'm not going to do this in QuickBooks Online because the QuickBooks Online experience is the exact same as what we're going to be dealing with in the QuickBooks Desktop experience because it's a manual process, right? So I'm just going to focus here and then get right on into Acumatica. Okay. So when you're dealing with intercompany transactions in QuickBooks, now generally, you know, first of all, you want to pick which company are things going to be functioning out of. So it's not best practice. It's not going to be best practice for you to decide or not have a decision tree on when each company file is paying a bill, right? So when does it go to sample Larry's Landscaping and Garden Supply Company versus when does it go to my sample manufacturing company? So it's best practice to pick one, right? Because then we're not having to try to tie things out across multiples. Now, that's not always the case. You can't always make that happen, right? But as much as we can simplify, we want to do that. Inside of QuickBooks, so if this is the company file that I'm going to be paying another business on behalf of another business, what we want to have is on the chart of accounts, you think about, so this company file is paying on behalf of another business. We want to have an other current asset account, right? Because it's a receivable to us, and we can call it intercompany. Okay. Oops, I can't spell. Actually, not necessarily that I can't spell, I can't see anymore. That's small. So we have an intercompany, and if you have several intercompany accounts, you would list each of those intercompany accounts separately in here, right? You need to be able to reconcile each independently. So then when we come in, we get a bill, we enter the bill, and we say whoever the vendor is, and down in the expenses area, we can go and post to that intercompany account, okay, and post the amount. So this is one way that people do it. This is the most accurate at the point of entry way for people to do this. The hardest part doing it this way, however, is it doesn't tell me in QuickBooks when I post this into my sample manufacturing file on the other side, which account should it be going to, right? So you want to keep that in mind, because right now I'm just pointing it to an intercompany account. But if this one should go to office supplies and the next one should go to bank service charges, that's not notated when I point it directly to intercompany, right? So maybe put that in the memo, okay? I've seen people do that. Also, in the class section, I do recommend setting up a class for whatever entity you're pushing that data towards. So this is one way to do it. It posts into the intercompany account. At the end of the week, month, period, whatever it is that we do, we run the details of the intercompany account for what is uncleared, right? And then we use those details to post into the secondary file, okay? I'm not going to show you all these things because I think that the focus really, if you want to see like how it does it without all the workarounds. The alternative that we've done for some people, because they don't want to put in the memo, you know, bank service charges or whatever it is, because then it's, right, choosing, making a choice and having to type things in all the time. The alternative that I've also seen some people do is that they will go in and they will post directly to bank service charges, right? And then they'll put it to the appropriate class. So the class is manufacturing file. And then again, on a periodic basis, whatever is not going to mess with your financials, they will go in and run the profit and loss by class, export that, and when they zero the profit and loss by class out, offset it to the intercompany account, right, and then post it into the secondary file, offsetting to the intercompany payable in the secondary file. So two alternatives, definitely both have workarounds. When you have things posted in the intercompany files, as I mentioned just a minute ago, so you can reconcile that account. Oh, that beep. I always think I've got the beeps turned off, but no. You can come in and reconcile this intercompany file. So generally, right, what we talked about when we're reconciling files that we don't truthfully have statements for in QuickBooks, then we say we're reconciling them to zero because it's a balance sheet account. So we're looking at the in and the out. That doesn't work in this case. So in this case, what needs to happen is one file is the source of truth. I go in, I reconcile everything for the month. So I start out, put in zero, reconcile everything for both months, comes out to $500, right? And then I can enter an adjustment. I'm sorry, no, I don't want to enter adjustment. I'm sorry. I want to go in there and I want to modify the reconciliation. Here, let me do it real quick. I can't believe I just did that. Banking, reconcile, and intercompany. Let me undo previous reconciliation. Okay. So one more time. So zero, I come in here, I see, oh, I'm selecting everything. Well, now I've got the $500 on the other side, but I'm selecting the $500. I see the difference here. I modify my ending balance to be negative $500. Oops, I did it the wrong way. Modify it to be positive $500. And then it reconciles to zero. And when I say reconcile now, and I get the details, this report is now what I can go and use to reconcile my other file, right? So we use one file as the source as if it is the bank. The secondary file reconciles to this one. That's how we tie and balance the two together. Again, a pretty manual process. Okay. Let me go ahead now to show you guys the options when it comes to tenancy in Acumatica. So we can have multiple tenants, right, which can be, I know it's very can have, right? There's a lot of choices that need to be made when we set this up. But it's distinct data, different versions of Acumatica possibly, similar customizations, completely independent companies with unique base currencies, chart of accounts, and fiscal periods, right? So if somebody has a fiscal period end in July, that is a subsidiary company of yours, and your fiscal and year end is a calendar year end, they need to be considered different tenants. Doesn't happen that frequently. Companies. So we can have multiple companies where we share data with other companies. This is what we're talking about. Real-time consolidated reporting, we can have distinct legal entities and tax ID numbers, and that allows for intercompany accounting. We can also have branches within companies. Branches you can have, you may have, right? So can, may, have distinct tax ID numbers and distinct 1099 data. So it's another opportunity that's very similar to company, but it's kind of a sub underneath. So we would have to help you decide, why would I use a company, or when would I use a company versus a branch? And then of course we have multiple ledgers that are available in each of these branches and companies. Okay, so let's get into Acumatica. Pull over from my manufacturing demo that I did the other day. So when it comes to Acumatica, what I'm looking at here is I'm looking at multiple companies that I have set up. Revision 2 products, right? Products retail. Revision 2 services is the company. Services West, Services East are the branches under that company. So I have access to each of these based off of my user rights. The user rights and permissions are shared across the multiple company files. Okay, that's how I have it set up. Now, right now it's checked off as products wholesale. That means when I'm doing entry, it's going to default to that company and that branch. Check into one of these other ones here as well. Up top, we have the different tenancies. So this is where they are separate, potentially separate, not all of them actually are, but potentially separate, completely separate companies with completely separate access in Acumatica. Okay. When it comes to intercompany accounting, mapping, interbranch mapping accounting, what you do in Acumatica is you set up each of your branches, right? So I have my products wholesale, which is what I'm logged into. And in here, what it's saying is when a transaction originates in this branch, what do I do to the other branches? So in the destination branch, the accounts that I'm allowed to post to, which is basically all accounts, are here. What is my offset account? And if we have any sub accounts, you'd be showing that there. Transactions in destination branch, so I'm sorry, this is in the originating branch. This is in product wholesale. And then transactions in destination branch, where would I be posting to, right? So in theirs, I would be posting to 2600, which is a liability account on their books, okay? Let's go ahead in and enter in a new bill so you can see what the result of this is as well. So when I come in and put in a bill, of course, everything's running all nice and super fast today, right? AA vendor, I'm going to choose AA vendor. I'm going to put in my vendor reference number. I'm remembering, I generally forget that on all of my demos. And then down here, see, it defaults to the product wholesale branch, but I'm going to choose, well, I'm going to leave the top line to product wholesale so we can see the result of that, right? So it's going to be cost of $5,000. I also have projects and tasks required. So I have to add that in here just because in my demo file I do. On the secondary line, I'm going to post to Services East because this bill is a bill I'm paying out of product wholesale, right? But it's affecting Services East and Services West. This is $8,000. And then I'm going to add in a different, oops, I forgot to put the project. I'll do that again. And Services West is going to be $12,000. Okay. I know I'm clicking around here. In our poor demo files, we get so they get so abused. I have way too many things on the screen here, right? So if I go ahead and say save, oops, it didn't. Hold on, it didn't pick up my project here. Put it back on hold and put in my project X. Okay. Let's see, off hold and save. Okay. So now I have this saved. I'm going to come in because I have, based off of the size of the bill, I have an approval built in, so I have to come in and approve it. And then now I can go ahead and release this transaction. Okay. So this transaction is being released to the general ledger. We have all sorts of videos on needing to have release or automating the release in here. But behind the scenes, just like we have in QuickBooks, now in Acumatica, I can go to the financial details and see my transaction journal. So what are the debits and credits that are happening behind the scenes on this transaction? So you can see here, the first line is what is hitting in accounts payable. So this is hitting in the product wholesale branch accounts payable for $24,250. I don't know what I did with $750. I did something with $750 in here, but in product wholesale, right, there's that $5,000. Again, I don't know what I did with this. I'm not sure what this came from, but okay. In services east now, I'm posting to cost of goods sold inventory. Oh, it's because of the account I picked up on, but I posted to cost of goods sold inventory, so it's hitting the expense of cost of goods sold inventory, account 5,000, in services east for $8,000. Hitting services west for $12,000, right? And then, so it's hitting their P&Ls appropriately. And then in product wholesale, I have a $20,000 receivable hitting my due from entity. Okay, so one transaction doing all of this movement behind the scenes. Then in services east and services west, I also have liabilities on the account, right? So it doesn't hit their accounts payable account because they're not responsible for paying it to the vendor, but it does hit their other current liabilities because they're responsible at some point, hopefully, for paying it back to product wholesale. Okay, so very cool. Let me just make sure I didn't miss anything there. So, of course, some of the things that you want to consider doing, which you can still do in here, is reconciling the intercompany transactions between multiple company files. Also, when you are running reports, you can eliminate, right? You can eliminate the intercompany transactions. So if I have $20,000 in receivable on product wholesale, and then I have $8,000 when I'm running consolidated financials, right? So it says product wholesale balance sheet, receivable $20,000. Service east balance sheet, payable $8,000. Service west, payable $12,000. By eliminating entries, you can balance those against each other to zero them out. Because in the grand scheme, when I'm looking at my totals, those should balance out, right? Hopefully. And they don't need to show up on our reporting. When you're producing financials for banks for multiple entities and the intercompany transactions don't balance, that can be a flag that you just don't want them to have to bring up, right? Don't need them to focus their energy there. Instead, focus your energy on all of our great assets that we have. Okay, that is really all that I had to show today as far as intercompany transactions differences between the two files. QuickBooks, I didn't talk about the eliminating entries. QuickBooks Enterprise does have the ability to combine reports across multiple company files. You do have to log in and out of each file to do that. It doesn't have eliminating entries when you do that. So what we've done sometimes is you export the data into Excel, you copy and paste that Excel data into a new worksheet or a worksheet that is preset that grabs that data and eliminates it for you, right? It's kind of a workaround. It's still a one-time setup, but it is a export, right? And have Excel work for you to do those eliminating entries. Now, there are products out there like QVinci's that will do these kinds of things for you, where you can say this account and that account get rolled up together so that you don't see or maybe these accounts don't show up on my financials, so you don't see those. So, all right, if there are no questions, I haven't seen any questions yet. Let me see. Can we see that other slide? It popped up, then went back to formula success again. Okay, so I guess what we're asking is this slide. Just said that other slide, so maybe this is what they were talking about. So if anybody wants to grab a snapshot, I can let it set up there for a little bit. But hopefully you guys were able to learn a little bit about the differences, right, and how they're managed, what QuickBooks is capable of doing, which works just fine for a lot of people. We make it work. We actually did a custom project one time that was doing the intercompany reconciliation for customers between multiple company files in a custom application on top of QuickBooks. They were able to reconcile 90 QuickBooks files, and it was just like a bank reconciliation screen. So we have done that custom, so they didn't have to go into an ERP product. Yeah. Okay. Just looking for any other questions that came in. So thanks, Danny. Yep, it's here. If you guys have anything else, just let us know. We are doing a webinar not next week, but the following Wednesday. I think that's on bank reconciliations. So please go ahead and check that out. If you missed the What's New webinar in QuickBooks, also just let us know. It's posted on our website, but if you guys didn't get to take advantage of watching that, please let me know, and we'll get that over to you. It's some exciting stuff. All right, everybody, I hope you guys have a great rest of your day and a wonderful weekend. Thank you.